Us now for more on the region's economic recovery is Darius Kowalczyk, Chief Investment Strategist at SJS Markets, joining us in the Hong Kong studio. Good to have you back with us, Darius.
Thanks for having me.
You know, the Fed sounded nuanced in its inflation comments. It said it'll keep rates low for an extended period, but at the same time removed that phrase saying deflation. What do you make of the Fed's decision here in the statement? Do you think they're trying to communicate to the markets that an exit strategy is coming?
I think that clearly the Fed has really shifted their outlook because they are not only not concerned about deflation, but also beginning to highlight inflationary pressures from rising commodity prices. And they also became more upbeat about prospects for economic recovery. Therefore, it seems difficult for US policymakers to keep the current interest rate level for a protracted period of time. I think they will start raising in December.
If any, I think the Asian region is the one that faces the inflation risk the most. I mean, just look at Japan and China. They haven't really cut rates since the start of the year, and you've heard that the Taiwan Central Bank kept rates steady, along with Hong Kong. Are the Asian central banks likely to hike rates even before the Fed does?
I think this is very unlikely because the focus still remains the economic growth rather than inflation for central bankers in the region. And policymakers will want to be comfortable with growth prospects, which depend on the US. Therefore, they will not hike until there is clear signs of a recovery of the US economy, and by then I think the Fed will already be hiking. There is, however, a small chance that China might move ahead of the Fed because growth in the second biggest Asian economy depends on domestic demand rather than exports to a large degree. And because the fiscal stimulus is working so well and growth is picking up, it may be that inflationary concerns there will prompt them to start hiking rates even before the US does.
So how soon is that going to happen if China hikes rates before the Fed? And is that going to be timely enough to contain inflation risk in China?
Well, my view is that the most likely scenario for China is to start tightening its monetary policy in the first quarter of next year, just after the Fed. But it is possible that they will move sooner, and inflation will be the key driver of such tightening. Central bankers have to worry that rising commodity prices and fiscal stimulus will sooner or later trigger inflation, and a precautionary policy tightening at some point might be in order.
Darius, just very quickly, inflation a risk, but so is growth. When you look at the Hong Kong export revenues here, it's fallen for a 7th straight month, and Japan's exports continue to deepen in its slump. What is the risk of growth actually becoming a problem for some of the countries in the region?
Well, clearly growth is going to be negative for most economies in Asia. The question is when they are going to rebound. And I think that for this to happen, the US has to recover first. So I think that we will be confident about Asian growth at the end of this year.
Okay, it's good to talk to you. Thank you so much for joining us.
Thank you for having me.
Darius Kowalczyk of SJS Markets here in the studio. And before the break, here's something to think about. Where, oh where have all the millionaires gone? A survey by